I get a lot of questions all the time like, AK, how do I know a crash is coming? AK, is this a bear market? A lot of questions just like that, and they all have that voice for some reason. Bunch of 9-year-olds. No, I'm kidding, but it is a really good question because everyone wants to know how to protect their money when a crash comes, right? That's why it's one of the top search terms on YouTube and Google. It's why I name all those market review videos I do as bear market now? Is a crash coming? It's what people want to know. It's probably what you want to know. So in this video, I'm going to show you one of the simplest, easiest, but most effective ways to know when the market is turning so that you could pull your money out before anything bad happens and protect yourself against crashes like the one in 2000 or 2008. And this method I'm talking about that will help you gauge the market actually comes from this book, Plant Your Money Tree, which I just finished reading recently. And this book is actually a new book written by Mish Schneider, who is part of the Market Gauge team. And the Market Gauge team is the same team I work with to bring all you guys the NASDAQ All-Stars, which, you know, I talk about in like every single video. So they're super smart and I work with them a lot. So of course, that's why I was going to read the new book. And I know Plant Your Money Tree sounds like a generic title. But what's funny is that I'm actually working on a course with Jaspreet over at Minority Mindset right now. And we had to come up with a title. So I was thinking, okay, what could the title be? Fuel your investment vehicle? Feed your investment horse? Slaughter your investment pig? And eventually I came to Plant Your Investment Seed. And I thought I was a genius. I was like, no one has ever thought of this before. This is great. And sure enough, my buddies at Market Gauge were working on the same title. But don't let the title fool you because what's inside that book is really key. And what Mish goes over is actually part of what we use in another strategy, which I haven't shared with you guys yet. It's coming out this summer. But that strategy that uses the stuff in this book is amazing at market timing. It always surprises me. And we've made a lot of money using it. But yeah, in this video, I'm going to show you the basics of how to tell if the market is turning and a crash is coming. But I'm just going over the basics. You should definitely pick up this book and learn more about it. This is actually a pre-release copy that I have right here. The actual book goes live on May 8th, which might be today, depending on when this video is released. But I'm going to put a special link in the description and comments. And with that link, you'll go to a page where you could sign up not only to get the book, but to get some special bonuses. So you'll get the book, but then you'll also get a private training that Mish put together that expands on the concepts in the book. And you get access to a market phase tracking tool put together by Market Gauge that will basically help you keep track of every single market. So you know if it's turning into a bear market or not, and if you need to take your money out. Super useful tool, and I don't know why exactly they're giving it away with the book. Nice people, but definitely check out that link. But okay, this simple system that is super effective in timing the market has everything to do with moving averages. So here's an example of a moving average right here, this gold line and this blue line. The gold line is the 50-week moving average, and this blue line is the 200-week moving average. So the 50-week moving average, all it does is take the average price of the last 50 weeks. So it kind of smooths out the trend for you so you know where things are going instead of seeing all these little candles. So you can use these two moving averages, the 50 and the 200 week, to understand where the market is going. And this is exactly what this book teaches you how to do. So let me give you an example of how this works. This, what you see right here, is back in 2008, the great financial crisis. This is where the market fell over 55%. It was crazy. Everyone thought it was the end of the world. People lost their life savings. It was just a horrible, horrible time. But if you were using this Market Gauge method, then you'd be okay. You would have gotten out before things got too bad. Let me show you how. So there's three phases of the market that you got to watch out for when things start to turn. The first is what Mish and the Market Gauge team called the caution phase. And you can tell it's the caution phase once price drops below the 50-week moving average. And again, the 50-week is this gold line right here. And when price drops below, which is right around this area, you'll see that the 50-week moving average starts to flatten its slope, because normally if things are healthy, you will see an upward slope like back here. But here, when price dropped below that line, you saw it start to flatten. And that's your caution signal right there. And that tells you that the market is starting to turn. There's a collective feeling of fear. Now, if you see this happen and the caution phase trigger, you might decide to lighten up your positions a little bit. Like I personally wouldn't get completely out of the market because sometimes things turn around. Like you saw right here, it's going below and above. It's kind of fighting with the line. We don't know for sure that it's the full caution phase until we get to right around here. Now, the next phase where you know things are definitely getting bad is when the price drops below not only the 50-week, but also the 200-week moving average, this blue line right here. So this point right here. And this is what we call the distribution phase. This is when you start seeing institutional investors. I'm talking like hedge funds, pension funds, mutual funds. I'm talking all the big boys. They start dumping their shares because they see bad news in the market. And when the big guys start dumping shares, that really starts to move the market. So that's a bigger signal. And again, for that phase to trigger, you got to see price under both the 50-week and the 200-week moving average. And then you want to see the slope of this 50-week moving average turning negative, as it is right here. Now, at this point right here, we're about almost 18% down from market highs. So if I was using this method, I would probably take half of my positions off right around here in, remember, what we call the caution phase. And that's down almost 11% from the highs. And remember, I'd only take half off because we're not sure if things will turn around. But by this point right here, the distribution phase, I'd probably take all my money off. Now, the next phase is where the panic sets in and you get the bearish phase. That's when price, as you can see, is already down below both of these moving averages, but you also see the 50-week moving average cross below the 200-week moving average. And you can see by that point, we are down over 40%. People are panicking. They're losing their savings. They don't know what to do. But the selling isn't just over yet, because we know it drops all the way down to over 56%. So even if I waited, if I didn't get out of the caution phase or the distribution phase, and I waited until the true bear phase, I would still be saving a decent chunk of my money. Sure, I'm getting out at 40% below the highs, but that's a lot better than the full 55%. So you can see this simple method of moving averages and price kind of tells you where the market is headed, and it can give you a really good system for risk control. And I just did a light overview of it. Mish goes into a lot more detail in the book, and she also goes over the other side of the coin, because okay, now everyone is bearish, it's a bear market. How do you know when the bottom is in? How do you know when it's time to start buying, when it's time to be greedy, when all these other guys are so fearful? Well, this same methodology can help you understand that too. So not only can you get out before the crash comes, but you could get in again once things are good. And you know, if you invested at the bottom in 2009, you'd be sitting on a large chunk of change right now, because you are getting the absolute best deals after a market crash like that. So Mish covers all of that in this book, and she uses the same strategy to relate how you can look at the economy in general. You can see what industries are doing well, how that affects your own job potential. If you got kids, what college degree should they be looking at? So not only can you use this method to time the markets, but you could use it for a lot of other things in life too, which Mish explains all of it here. And again, I'll put the link so you could purchase the book down in the description and comments, and use that link, because through that link you also get those bonuses I was talking about. So the bonus video training, and then also that market phase tracker, which is really useful because it's the tool that basically does all this for you. So click that link, check it out, and of course don't forget to subscribe to this channel and smash that bell so you get email notifications when our new videos come out. We're publishing videos every single day, almost all markets and business related. So subscribe, and I will see you in the next video. Stay fallible out there. Bye.